Good morning, all. Can you hear me? Can you hear me? Can you hear? Yeah. Very good morning to all. Today is our sixth session. Mm, Today we are going to discuss about responsibility account first. So first, try to understand what is meant by responsibility account. Responsibility is but assigning a duty to a specific person. Responsibility means we have to do. If it is an obligation on your part, if you are to do a particular work, then it is called as a responsibility. So, what is meant by responsibility account? See, in a business organization, there are different business units are there. So, each business units will be working on different objectives and different parameters. So, one of the main thing that is constraint to the each department is the cost. So, under cost accounting and management accounting, we will try to ascertain the cost of each department, and also under management accounting control the cost also. So, responsibility is a system of accounting under management accounting area of management accounting, where specific individuals are made responsible for accounting in particular areas of cost control. See, there will be different segments in a business organization where cost will be incurred. So, all the cost cannot be controlled by the management from a centralized place. So, they need to be divided into different segments. So they have the responsibility can be assigned to each individual. That individual will be given the responsibility to control that cost in a specific segment. So the whole responsibility accounting, the whole process of responsibility accounting that we discuss will be as this. So what are different what is meant to be a specific business unit? What will be the objectives of specific unit? What kind of responsibilities can be assigned to each individual in that department? And all those things can be discussed under responsibility account. In this accounting system, responsibility is assigned on knowledge and skills. See, it cannot be assigned randomly or blindly to anyone, the responsibility. Though it looks very simple for the control of cost, so it requires certain set of knowledge. The person to whom the responsibility is assigned should have a set of skills, should have a set of knowledge to understand what management actually wants. And accordingly, he has to plan the activities, and accordingly, he has to achieve the objectives of the management under the process of responsibility accounting. So, in this case, if the person to whom the responsibility assigned was not able to achieve the targets what was achieved to him, he is held accountable and he is answerable for the non-achievement of his targets. So, if he was asked to control the cost, he was asked to put the cost under control. In such cases, if he is unable to do that, then it will be the responsibility of him. He has to answerable for that. He has to give an explanation why he was unable to control the cost, and he has to give a reason for the management. Okay. So now let us come to know what responsibility accounting refers to a system that undertakes the identification of responsibility center, subsequently determines its objectives. As I already told, the cost will be incurred at different segments of the business organization. And each segment will be considered as each segment has its own objective, each segment has its own cost, each segment has its own activities that has to be undertaken by it. So under responsibility accounting, the first step is the identification of a responsibility center. Responsibility center is the base of identification of the responsibility center is the base for the responsibility accounting. What is meant by responsibility center? We'll discuss further. So first, for the time being, let us understand responsibility center is like a specific individual department in a business organization. For that specific individual department, specific objectives will be defined under the responsibility account. Accordingly, This responsibility accounting helps for the development of processes that are related to the measurement, that are related to the performance measurement, as well as preparation and analysis of performance reports of the identified responsibility center. See, once the objectives were assigned and once the performance targets were designed, so under responsibility accounting, what is the next step is that next step is the measurement of performance. Performance measurement is nothing but are we able to achieve the targets or not? And then accordingly, we have to prepare the reports and we have to analyze the reports of each responsibility center. Whether the responsibility center will be able to perform its duty, the responsible manager will be able to perform his duties as per the targets assigned to him, or there any deviations, and the deviations for the same can be identified by the preparation of performance reports for each responsibility center. And overall, in simpler terms, we can define that responsibility accounting helps companies divide their operations into different smaller segments. So, in the whole responsibility accounting process, what happens is it can help to divide the operations of the company into different smaller segments. They can be divided into each individual department. They can be divided into a small team. So, and then accordingly, their objectives and targets can be defined. Once their objectives and targets were defined, say under responsibility accounting, what will be done is the performance can be tracked, and performance can be tracked for each individual segment separately. So, by doing this, what will happen is the company can understand what was actually happening in the organization in a segment manner, so that they can able to take the decisions in a segment wise manner. So this will help you give a comprehensive picture of the business performance at different levels of the business organization. So this is the meaning about responsibility accounting. Responsibility accounting is nothing but assigning a responsibility with respect to a specific business unit in a business organization, and one person is held responsible for achieving those targets, and accordingly his performance is measured against the defined parameters, and it can be reported and analyzed further for the further decision making process. Next one. See what will be the essential features of responsibility accounting. What are the major things that will happen under the responsibility accounting? See, the major inputs and outputs for the under responsibility accounting is the monetary units. See, when we decided to implement a responsibility accounting system in an organization, the first step is we have to understand what are the various costs that we are going to incur, and what will be the outputs of that investment. What will be output of that cost incurred in each department? That means what kind of revenues or what kind of benefits by incurring such expenditure can be generated with respect to a business unit. So this is the first step in the process of responsibility accounting. So we have to understand what are the basic costs and what will be the basic revenue structure of each individual department. Then for achieving this, they can also take into consideration the budget planning. So normally under management accounting, companies will prepare budgets for different individual departments, and our budgets will be communicated to each individual department. So when designing this responsibility accounting system, there will be budgeting also can also be taken into consideration. Then what is the next one? Relationship between the responsibility accounting system and the organization structure. See, responsibility will define a clear-cut relationship between different departments in the organization. The lines of authority and the organization clearly. And the accounting system is designed according to the existing organizational structure and as per the hierarchy of the organization. So it depends upon it will be done at different levels, taking into the hierarchy of the organization. That is top level organization, top level. So at each level, what will be the response? What will be different type of responsibility centers, and what are their objectives, and what are the targets, and how they are interlinked with each other. So this is also one of the important things that is considered under responsibility accounting. And these are the basic things, and the basic thing that we have to understand is one of the important thing is that identification of the responsibility center. What is meant by a responsibility center? What when we will call something as a responsibility center? So that important step, one of the important step under the responsibility accounting is the identification of a responsibility center. If the activities of any one business segment is considered to be it may be taken from a positive perspective or it may be taken from a negative perspective. Positive perspective means if its contribution is significant to the organization, then it can be considered as a responsibility center. If its contribution is impacting if there is any deviation from such any department in a business organization, so that is also called as a responsibility center. We have to hold it accountable and then we have to take a decision. So identification of a suitable responsible center is one of the features under responsibility accounting. And finally, reporting. So for each responsibility center, different targets will be defined and different objectives will be defined and the process will be defined. The person who is held responsible for this will also be defined. So there will be a certain time period for the evaluation of the performance. So for example, it may be in some organizations, it may be for 1 month, or it may be for 3 months, or it may be for 6 months, or it may be for maybe for 1 year also. So it may be periodic. It may be a periodic review. So uh, ultimate object is the performance review under the responsibility account. So these are some essential features of responsibility account. Next one. So far we are talking about responsibility center. And the important step in the process of designing a responsible accounting system is also what is meant by responsibility center. If you want to understand it very simply, responsibility is nothing but a specific individual department in a business organization. So the department can be of any type. But it must be functioning to a specific requirement of the overall business organization. Overall business organization. Let us understand. A responsibility is a specific organizational unit within a company or institution. So it will be a specific unit in the business organization or in any institution for any institution. So which has got a distinct responsibility. Distinct means we will be having a specific responsibility that has to be performed by the specific department. So for example, in a business organization, sales department will be there. Sales department is one responsibility center where it has got distinct specific responsibilities that it needs to be achieved. Likewise, different departments will be there, and for each department, there will be distinct responsibility that they need to be achieved. And it is held responsible and it is held accountable for its performance in achieving those responsibility. So that department for which it was defined, for which it was been functioning, it is held accountable for its performance in achieving those responsibilities. So that these units can be departments. You can say they can be called as departments, or they can be called as divisions. There can be a group. There can be or it can be a group of individuals. So it depends upon the organizational structure, how an organizational structure has been defined. So depending on that, there will be departments, there will be divisions, there will be teams, and there will be different individuals working together. And each of this center is responsible for a set of activities and tasks, and its performance is evaluated based on the predetermined goals and targets. Each of these responsibilities having a different set of activities and different set of tasks that need to be performed. And each of the performance is evaluated against the predetermined goals and targets. Predetermined goals is that within the responsibilities that was assigned to the department. Say for example, here we discussed about the sales department. Say for example, sales department has a target. If the business organization is selling some 2-3 different products, the sales department is given a target of selling some 3,000 units for one product and 2,000 units for some product. And there will be a target with respect to managing of the cost in promoting the sales and in the marketing activity. There will be a time period of 3 months within which the responsible manager has to undertake his activities and has to achieve the targets as per the goals set for him. So this can be evaluated after a period of 2 or 3 months as per the organizational policy or requirement. So the responsibility concept of responsibility center and responsibility accounting helps us to segment different types of organization, different type of operations in an organization, and will help us to do a more detailed analysis of performance and resource allocation among different business units in a business organization. This is what we call as a responsibility center, and this is the core of responsibility accounting. One should have a clear understanding of responsibility center. To understand it very simply, we can say it as a department, each which will have a specific set of objectives to be achieved and goals to be targets to be achieved, and its performance will be measured against the predetermined targets and goals. Yes, just we have now so far tried to understand what is meant by responsibility center. So let us try to have a look about what will be different type of responsibility centers that will be existing in a business organization, and what will be their core objectives, and what will be their core objectives. Managers are vested with specific responsibilities in terms of interests, incurs, and revenue generation or investments of the fund. See, there are four types of. Hello. Can you please mute the system, please? Some disturbance. Hello, can somebody mute the system, please? Some disturbance is there.
మాట్లాడతా పిండి పెట్టాల నోరుతో మాట్లాడతారు తినేత పిండి పెట్టాల ఇంటి పెడితే మాట్లాడింది లేకపోతాయి
మా అయ్య నాకు నేర్పిలేదు కనిపెట్టేటోడు దొరకాలంగా వానికి ఏం ఆడుకుంటుందంటే నిజంగా ఫోన్ కనిపెట్టినాను
అదే మరి
ఎట్లా ఆడుకుంటానంటే కానీ ఎవరు కనిపెట్టినాడు
మాట్లాడతా ఫోన్ నోటితో మాట్లాడతా పెట్టలేదు.
Yes. Are you able to hear now? Can you hear my voice? Are you able to hear me?
Excuse me, sir.
Just try to understand. Yes, sir.
సార్ ఇది సమ్స్ ఎక్స్ప్లెయిన్ ఏ క్లాస్ లో ఎక్స్ప్లెయిన్ చేస్తారా కొంచెం చెప్పగలరా?
సమ్స్ ఆల్రెడీ ఎక్స్ప్లెయిన్ చేశా కదమ్మా. ఏ సమ్స్ కావాలి మీకు? ఏ సమ్స్, ఏ ప్రాబ్లమ్స్?
యాక్చువల్లీ అసైన్మెంట్స్ ఇచ్చారు కదా సార్.
అసైన్మెంట్స్ ప్రాబ్లమ్స్ లాస్ట్ 3 క్లాసెస్ లో డిస్కస్ చేశానమ్మా నేను. రేషియో అనాలిసిస్, క్యాష్ ఫ్లో, ఫండ్స్ ఫ్లో, తర్వాత నిన్న కూడా డిస్కస్ చేశాను నేను. ప్రాబ్లమ్స్ ఇన్ ది చాప్టర్స్ అన్ని డిస్కస్ చేశానమ్మా నేను.
అది క్లాసెస్ అవి నేను మిస్ అయ్యాను సార్. యాక్చువల్లీ అప్పటికి నాకు లింక్ రాలేదు.
నేను కావాలంటే మీకు పీపీటీ షేర్ చేస్తాను, మీకు కావాలంటే తీసుకోండి, ఓకేనా? అంత ఇన్ఫర్మేషన్ దానిలో ఉంది. ప్రాబ్లమ్స్ ఎలా సాల్వ్ చేయాలి అంటే చెప్తున్నాను నేను. వన్స్ ఆఫ్టర్ ద క్లాస్ ఇస్ కంప్లీటెడ్ మీరు తీసుకోవచ్చు అమ్మా, నో ప్రాబ్లం, ఓకేనా? నేను అన్ని క్లాసెస్ లో అసైన్మెంట్ ప్రాబ్లమ్స్ అని బ్రీఫ్ గా డిస్కస్ చేశాను అమ్మా నేను, ఓకేనా? యూ కెన్ కలెక్ట్ ఆఫ్టర్ సెషన్ ఇస్ కంప్లీటెడ్. ఐ విల్ షేర్ యూ ద పీపీటీస్, ఓకే? పీపీటీస్ లో అన్ని ఉన్నాయి, మీరు చూసుకొని మీరు ఎప్పుడైనా సెషన్ లో డౌట్ ఉన్నప్పుడు నెక్స్ట్ ఎప్పుడైనా ఫ్యూచర్ లో నెక్స్ట్ 2 సెషన్స్ లో డౌట్ ఉంటే అడగండి, ఓకేనా? నో ప్రాబ్లం, ఓకే?
ఓకే సార్. యాక్చువల్లీ ఇప్పుడు డౌట్ ఉన్నప్పుడు సండే ఓన్లీ అవైలబిలిటీ అయితే మరి నార్మల్ డేస్ లో మరి ఎట్లా కాంటాక్ట్ అవ్వడం సార్?
యాక్చువల్గా వీఆర్ ఎక్స్టర్నల్ ఫ్యాకల్టీ. మీరు ఒకసారి డిపార్ట్మెంట్ లో కనుక్కోండి, ఓకేనా?
డిపార్ట్మెంట్ లో కనుక్కుంటే కనీసం దానికి సంబంధించి మెటీరియల్స్ కూడా కానీ టెస్ట్ పేపర్స్ కానీ అసలు ఏమీ అవైలబిలిటీ లేవు. ఎక్కడ అడిగినా సరే అసలు బుక్స్ ఏమి అవైలబిలిటీగా లేవు సార్.
యాక్చువల్లీ నాకు అంత ఐడియా లేదమ్మా, నేను కనుక్కొని చెప్తాను, సరే? ఓకే,
ఓకే సార్.
ఐ విల్ ఆస్క్ అండ్ ఐ విల్, రైట్? షల్ ఐ కంటిన్యూ అమ్మా? కెన్ ఐ కంటిన్యూ? తీసుకోండి. లాస్ట్ సెషన్ పీపీటీస్ ఉన్నాయి, నేను డిస్కస్ చేశాను ప్రాబ్లమ్స్. అందరూ ఓకే, యూ కెన్ కరెక్ట్ ఇట్, ఓకే? నో ప్రాబ్లం.
ఓకే సార్.
షల్ వి గో? ఓకే,
ఓకే సార్.
See, what are responsibility centers? So responsibility centers can be broadly classified into four categories. They are profit center, cost center, and revenue center, and the investment center. What is meant by profit center? So whenever the objective of a particular department in a business organization is to earn a profit. So that means if they are manufacturing any particular product or if they are manufacturing any group of products, the objective of the department is to control the cost and as well as to increase the revenue. So the responsibility of that manager, of the department manager, is to control both the costs and is to control, and at the same time he has to increase the revenues. So this type of department in a business organization is called a profit center. That means they have to make a control between the expenses and they have to focus on generating the revenues also. They have to focus on generating the revenues also. This is called as a profit center. So, for example, a manufacturing unit is there. So the manufacturing unit manufactures and at the same time it will be selling the products. It may be a specific business unit in a whole group of, and again the next responsibility center is the cost center. What is the cost center? This cost center is basically it's like a maintenance department in a business office. So there may not be any revenues generating from this unit of business, but it will be the supporting unit for a business unit. So, for example, in organizations like in business organizations or in any other institutions, there will be housekeeping department. You know, the role of housekeeping department is to do the maintenance. So whatever the housekeeping department does is nothing but carrying of the cost. So the responsibility of this department manager is to control the cost and improve the efficiency of its department. See, that means it may not put more pressure on the housekeeping staff, but they have to maintain a reasonable level of expenditure at this department in relation to the performance, in relation to the overall organization. Revenue, and the another one is the revenue center. What is meant by revenue center? In a business organization, revenue center, the object of revenue center is nothing but to generate the sales. So their main focus is on generating the sales. How much they are generating the sales. See, here also, this department will also be incurring expenses. They will be having targets also in terms of incurring the expenses with respect to achieving the revenue. But you know, the major objective should be the maximization of revenue. But in this case, if they are incurring additional costs also, the manager can defense his move while evaluating the performance of his department. He can say that, so why there was a change in the targets, why there was a need to incur additional expenditure. So if he can able to justify that, then there will not be a major, there will not be a problem, because the object of this department is to earn the revenue. So the primary focus will be on revenue generation. That, for example, is the sales department in a business. And the investment center. See, normally in a business, regular operations will be there. See, this profit center, cost center, revenue center, all these will be covered under the regular business operations. In certain business, there will be one investment center also. See, they may be having some resources with them, cash resources with them. So, if the cash resources are not needed at a specific moment of time, they can be used for the investment purposes, which will be helpful to generate for the some amount of additional revenue for the company. So the objective of this department is to focus on making optimum investment decisions. They have to make use of the cash resources in an optimal manner. Instead of misusing the cash resources, or instead of wasting of the cash resources, putting ideally, they can make investments in any financial instruments or in any real estate or in any opening of in any new branch for the company. So all these things can be focused under the investment center. All these can be focused under the investment center. So these are different type of responsibility centers in a business organization. Broadly, all the responsibility centers can be classified into profit center, cost center, and revenue center, and an investment center. Now we have discussed about whole thing, what is meant by the responsibility accounting, what are the different type of responsibility centers, what is meant by a responsibility center. So how this can be done? How this can be done? What is the process of doing it? So as we already discussed, that identification of and the definition of a responsibility center is the first step in the process of designing a responsibility accounting system. And after identifying the responsibility accounting, after identifying the responsibility accounting, the next step is to identify the goals. What goals for the department? What are the targets for each department? And who is the heading? Who is going to be heading the department? Once the targets and goals are defined, and the person who is responsible for doing the activities is identified, then he has to be assigned responsibilities for achieving the defined targets and goals of the particular responsibility center. Not only individual responsibility center, it can be applicable to different type of responsibility center across the business organization. And on regular basis, there was a need to keep an eye on the actual performance. We cannot leave it off like that. We need to focus on evaluating the actual performance of the each department on a regular basis, and on a regular basis as against the defined targets. So after evaluating the performance against the defined targets, there was a need to, if there was any change in the, then there was a need to identify the causes for why there was a change in the actual performance as against the target performance. And the reasons identified, and the management can take the necessary steps to overcome the why there was discrepancies in the gap, and they can try to fill the gap, and they can try to go ahead to achieve the objective. So these are the basic steps that were involved in the responsibility accounting. So this is also, we can understand from the earlier discussion about when we are discussing about the responsibility accounting and the responsibility centers and different type of responsibility centers. Now, so under responsibility, what happens is we will be dividing each department. We will be dividing the whole organization into individual departments, and each responsibility is assigned to a specific individual, and each person is accountable for the performance of the department. So with this, what happens is that the accountability of the responsibility manager will increases. So he will take the he will be performing as per the targets defined to him, and according to the according to the resource constraints he will perform, so that the accountability of the responsible manager will increases. So it is expected that it will improve the performance of the managers. So and also at the same time, it will help in the optimum utilization of resources. See, there will be a lot of resources available within the organization. So if they are not properly utilized, the resources will be wasted. So under this responsibility accounting, we will get an opportunity to allocate the resources optimally across different business segments, across the business segments. And also the goals will be aligned in a assigned in a systematic way. So each individual department goal will be assigned with the long-term objectives of the business, long-term objectives of the business organization. Each individual department can function according to the overall objectives of the business organization. And also, it will help to develop an incentive scheme for the responsible managers, so they can be motivated. See, when the departments are not divided into different segments, so there is no chance of identifying the performance of each person. So it will give a scope to identify the performance of each individual, and it will help to give incentives for each department. Each person who is held responsible for the particular responsibility center, we can make informed decisions. We'll have a first-hand information into our hand, and we'll have overall picture of the business organization when we are analyzing different businesses, so that we can take a better future-oriented decisions. So we can improve the performance, and how far the management decisions are working out. How far the management decisions are working out. What is the effectiveness of management can also be understood under the process of responsibility accounting. Overall, it will facilitate a better communication and reporting mechanism across the entire business organization. The responsibility accounting, if properly implemented, will help us to generate a different type of reports across the different business units, and it will facilitate a better communication across different business units. So we have discussed so far the advantages, scope, and the benefits of responsibility accounting. And it is not without its limitations. It has got its own problems also. So what happens is sometimes we thought that there will be optimum resource utilization. There are also chances some resource may not be properly utilized, some human resources. There may be chances of identifying an unsuitable person also. That is one of the limitation of responsibility account. Only major emphasis on goals which were already defined. So there won't be any change in the goals. There may not be change. Once the goals were defined, they will be functioning according to the achievement of those goals. And sometimes there are chances some indirect costs may not be taken into consideration. Only costs that are related to one specific department are only taken into consideration. So maybe chances are that each department will be working in coordination. Maybe chances that there may not be a collaboration. There may be some misunderstanding and miscommunications may also be happen. So this is one of the limitations. And as we already told that it is only a short term. Responsibility accounting is considered to be short term in nature, and the focus on long term goals will be very limited. While focusing on the short term goals, the long term goals may be somewhat they can be viewed in a shorter eyesight. So this is one of the limitations of responsibility accounting. So there is a complexity in identifying the responsibility center that cannot be easily identified, and setting up the targets is also one of the difficult tasks. So it cannot be easily identified. There may be overlapping of goals between different business units, and there will be no reflection of external factors. See, what is happening in the outside environment may not be taken into consideration while determining the while defining a responsibility accounting system in a business organization. So these are some of the limitations of responsibility accounting. So preparation of responsibility reports is nothing but individual each department wise responsibility reports can be prepared depending upon the different business unit, and mostly the responsibility accounting reports are prepared in two approaches. One approach is that only costs are taken into consideration. Only costs are taken into consideration, and there won't be any revenues, any revenues or expenses that are not controlled by the department will not be taken into consideration. Under the second approach, what is going to be taken is that they are going to take all the expenses and revenues that are going to be incurred by the particular manager that are without which will not be under his control also will be taken into the consideration. Therefore, responsibility accounting reports will be prepared on two processes. One is that they will be taken only on the expenses which are under the control of the manager. Under the second category, they will be taken which are not under the control of the manager also, of the manager also. So this is about the preparation of accounting reports, responsibility accounting reports. This is about responsibility accounting. Okay. Now let us go for next unit. Next unit is about corporate financial report. Concept of corporate finance. What is corporate financial reporting? See, we discussed about preparation of financial statements. What the object of financial statement is to communicate the financial information. What kind of financial information? The financial information that is essential for different types of stakeholders. So what is meant by financial reporting? So the preparation of financial statements is a part of financial reporting. Financial reporting is little bit broader than preparation of the financial statements. Financial reporting consists of preparation of the financial statement. But under the financial reporting, what will be there will be more information will be given, both qualitative and quantitative. But whatever the information, right? Whatever information that is given under the financial form, that will be supported by the qualitative information. So it is the process of documenting and communicating financial activities and performance over different time periods. So financial reporting can be done for a specific time period. It can be done for a period of 3 months or for a period of 1 year. So normally the practice of preparing normally the practice of preparing financial reports is 1 year, but internally they can be prepared for 6 months or 3 months. So using the financial report, the company will organize all the accounting data and report the financial status. So different types of accounting data. So we will be getting different type of accounting data, and all they will be presented in a summarized form of profit and loss account, balance sheet, cash flow statement, and cash flow statement and equity shareholders account. So the information that is included in the financial reports will give the current status of the company. So these financial reports, they are essential. They are essential in the projections of future profitability. So based on the information that is given in the financial reports, profit and loss account, balance sheet, and cash flow statement, and equity shareholder statement. So this will help you to give a perspective about what will be going to the future profitability of the company. What will be going to be the future profitability of the company. And also we can analyze, the industry position, at what position a company will be standing on, and what will be its growth prospects, and what will be its growth prospects. So the information regarding all these things can be given in the financial report that is made available to the public for review. See, people will, and financial reports means only profit and loss account and balance sheet, but financial reports, only profit and loss account, balance sheet, and cash flow statement are a part of financial. Financial reporting is a broader thing. Will include all the background information, all the activities that were undertaken by the company in different segments, in different beyond the business also be included in the financial report. So by taking all those information, and by taking the information from the financial statements also, we will try to understand the profitability in the position of the company. So there are several primary statements to use when reporting financial data, and the information included in these documents fulfill key objectives of financial reporting. See, not only it's about doing regular business activities, but will be doing some corporate social responsibility activities also. They will be doing some environment sustainability activities also, environmental friendly activities also. So these are all beyond normal business operations. So all those things are financial reporting. So as I mentioned that there will be different reports, there will be different financial information available in the financial reporting process. But the major statements are major financial and background information will be available from balance sheet, income statements, and profit and loss account, cash flow statement, and statement of retained earnings. These are the major financial statements that are available through the financial reporting, which is supported by the additional information. Not only the information that is related to profit or loss or the financial position, but also there are some other information that is essential for the stakeholders to understand. That information will also be given in the financial report. So two types. One is internal financial reporting, and another one is external financial. So internal financial reporting is related to the, it covers data that is needed for internal use and internal purpose. So all the internal reports are confidential in nature, and their main purpose is to guide the manager. See, internal reporting is providing information to them. So the managers are need of to take a decision. Say for example, earlier we discussed the responsibility accounting. The object of each individual, each responsible manager can be analyzed through the responsibility reports. So that such type of information is confidential and it is not available to the public. So the main purpose of internal reporting system is to generate such kind of information which is confidential in nature. So this internal reporting helps each team member determine what they are responsible for and what they are. So as we know that responsibility of one of the internal system. Each person will know what he has to do, what he has to achieve, what he has to perform. So that is one of the internal reporting system. So basically, the internal reporting system is used for business planning and budgeting and to forecast future results to make the best use of their resources. Mostly, the internal reporting is mainly focused on business planning, how to plan for the business. So, what kind of budgetary constraints a business has in performing in making its planning, and accordingly, based on the budgeting process and based on the business objectives, the future results can be forecasted, and accordingly, the resources can be utilized. So, this is the overall objective of internal reporting. Internal financial reporting basically focuses on fulfilling the objectives of internal management. It will help to give the necessary information for the management to take future-oriented decisions. External reporting. So far now, the major focus of this chapter is about external financial report. It is also called as corporate financial report. So we can differentiate now the corporate financial report from the internal report. So internal reporting is completely internal to the business organization, and it is tailor-made or custom to the requirement of the manager. Under external financial reporting, it is completely a systematic way of representing the information. It is used by the company to communicate its financial such as investors, lenders, and the suppliers. So there will be different stakeholders for the business organization, like investors will be there, lenders will be there, and suppliers will be there. Each of their requirements will be different, and they will be provided with the required information as per their requirements. They include a balance sheet, income statement, cash flow statement, and statements of equity, shareholders' equity. And depending on the nature of industry and the type of investors, there are several financial statements and ratios they want to see. See, what happened is that the financial reporting is very specific to the business organization. But when it comes to the stakeholders, they are diversified. So they will be dealing with different business organizations across different industries. So there was a need for there was a uniform way of information to all the stakeholders that will help them to understand financial statements, and that will help them to calculate the ratios that will make them to compare the financial statements of different companies across different business organizations. So the financial, that means the corporate financial reporting should be it should be more transparent, and it should be more uniform in nature. So it may not be the case with the internal report. It is customized, and internal reporting will be customized, and it will be the requirements of the manager. Whereas the external financial reporting must be in a systematic way. It should be in a uniform manner. It cannot be like we cannot give as whatever we want. We can only give the information in a systematic way. So in the whole corporate process, the basic thing is the preparation of financial. The whole information, majority of the information is given to the financial information. So various stakeholders are there who will be interpreting the financial statements. There are various stakeholders who will be interpreting the financial statement. So we should make the information given in the financial statement to the stakeholders, relevant to the requirements of each state. So now, of each stakeholder who is associated with the corporate financial reporting process, who is associated with the information corporate corporate financial. Thing is, first and foremost, use of the corporate financial information is the management itself. They are the person who will prepare the financial statement. So their performance, the decisions they have taken internally, and internal information given to them, performance can be reflected in the form of how much profit the company generated, what is the stability of the company, whether the company stability is good or bad, what is the cash flows that were generated by the company during the period, what position of shareholders, are able to add value to the shareholders. All this information again can be derived from the financial statement or can be derived from the financial. This is the main source of information for the management itself. Again, it's of the company. So they don't know the finance. So they have to be given the required information. So that will be helpful to understand them. Give them uh, it is reflected in the form of financial performance, profitability, the stability of the business enterprise, and the generation of cash flow. See, all this information can be provided to the investors who are related to the company in a very simple manner. To be able to interpret the information that was given by simply, easily. Again, the customers who are dealing with the company, for a company which is standard based performance, which is having continuity performance, which is having a bad service orientation. So all this can be reflected in the form of corporate financial. That information which is essential for the customer to understand company is doing well can be given to the corporate financial. And though we are not about the competitors, though we are not focused on giving information to them, it's also one of the stakeholders of interpreting the financial information of a company. They wanted to know what a company has been doing, how it is doing, what are the advantages of the company, what are the challenges the company. So that they try to make some make out some information from the corporate financial reports of the company, government and government agencies. So the corporate financial information will give all the regulatory information. It includes all the regulatory information. As apart from preparing the financial statement and balance sheet, balance sheet, that corporate financial report also includes some information that is in compliance with the regulatory requirement. So there was the need to give some regulatory information also, which is apart from financial performance. Employees. Employees working in the business organization, they company or they have backlogs in the company. They're enable the business. So this will help them to understand regarding their growth within the company. Their bonus and incentive schemes uh, can be understand based on the performance of the company. Investment analyst. The object of investment analyst is to make investment decision to the different shareholders. So if he has to make a proper investment decision, he has to interpret the information given in the financial reporting. All the investment analysts will not be getting information access to the information from the financial. They can suggest investment decisions to the shareholders whether to invest in the company or not to invest in the company. And lenders. Lenders are the outside stakeholders. They are the one who will provide additions to the other than shareholders. The obligations towards the shareholders is not compulsory, but the obligations towards the lenders is compulsory. When a lender is giving your money to you, say for example, a bank wanted to give you a loan, or a financial institution has to give you a loan, or if rate, so they will go to your financial center. If they decided to give you a loan, or they are going to advance you a loan amount to carry out your activities or to carry out any of your investment activities, they need to understand what is your performance, what is your financial position. So that is the financial reporting. Only thing is what we have to understand here is preparation of financial statement is the basic thing, and interpretation of this financial statement. For the interpretation of this financial statement, interpretation is nothing but understanding the information given in the financial statement. Additional information that will help all the stakeholders to interpret the financial position or financial performance of the company in different perspectives. Each one has a different objective. One person looks at assets and one person looks at liability. One person looks at revenues and one person looks at the expenses. Overall, they should be able to come out with a value relevant decision that will help to make them improve their relationship with the company. Credit rating agencies. Credit rating agencies normally they will rate you based upon your fulfillment of credit obligations, external credit obligations. That is, they will rate you on how you are fulfilling the obligations of outside stakeholders. You are getting the loans. The on loans we have to pay fixed interest, fixed amount we have to pay. So how these obligations are settling, whether they are settling on time or there is any discrepancies in settling those obligations. So the credit rating agencies will analyze this performance and they will give you a rating. Based on the rating, even performance again be evaluated by different stakeholders. This is also one of the parameters that will be helpful to understand the performance of the company. And the suppliers are the major people who will supply you the goods, who will supply you the various supporting services. Also, they may sometimes wanted to give you without any expenses also. They may give on credit also. If they wanted to give on credit, they wanted to look at your performance, how you are performing, what is your background, what is your future. All this can be understood. All this information can be given in the corporate financial reporting process. Need for financial reporting. See, after doing all those things, it will gives you the confidence. It will gives a confidence for all the stakeholders. So once after understanding the financial reporting, if your financial performance is good and if your background information is good and it will be giving you a clear picture of the business, it will help you in raising the capital. By understanding your performance, you can get capital from the open markets. You can get investments from the outsiders. You can get private investments. And also, we can give you the investors the confidence. Reassurance can be given. So you can assure the investors that your investments will not be loose. You are in a safe position. That type of assurance can be given with a better financial reporting. The process of financial analysis will be simpler. We can measure the operations. We can define the targets. We can even give employee better compensation by doing a proper analysis if the information given in the financial reports is genuine and fine. So it will help in fulfilling the compliance and regulatory requirements. As we already discussed at this point, it will helps the government and government agencies to understand what was happening with the company, so that they can take an appropriate decision at the right time, whether they are performing on the right directions or there are any deviations against the law that can be understood from the financial reporting. This is again that overall objectives to provide information to the investors, and it will help to track the cash flows in a business organization. Accounting policies, as I mentioned that this is one of the important things. How financial reports will be prepared? Financial reports will be prepared on accounting policies, accounting standards, what kind of rules you followed in reporting the financial transaction, how you are reporting the financial information. This information can be given. This information should be given in the financial report. The financial reporting should enable to take it under financial reporting. If you are unable to take it, accounting policies information should be given. It should enable to take asset valuation. It will enable to take valuation of the liabilities and liquidity and equities. So the overall objective of financial reporting is to provide desired information to the investors, to analyze the cash flows of the company, to understand accounting policies followed by the company, and to make a better analysis of the asset liability position and incomes and expenses of the company. These are the overall objectives of financial reporting. So qualities. So all these things are just an interpretation of what we have discussed so far. All these things will give you an idea about what is meant by financial reporting. See that what are the basic qualities is that the financial reporting should be understandable. See, it should not be like that there should any confusion or ambiguity in reporting process. So whoever different stakeholders are there, each one has their own motives. So each one has to understand what are their requirements. So the information that is provided in the financial reporting should be understandable. It should be relevant. They should be getting the information whatever they want. If someone wants to know about the asset position, they should be easily understand about the asset position. If someone wants to know about the liabilities position, they can know about the liabilities position. So, for example, creditors are there. If they wanted to know the liabilities position, they can understand whether their liability can be paid or not. So that information should be available for them. And then reliability. This is one of the important things. Reliability means whatever the information that we are giving in the financial reports is true or not. Correctness, accuracy, whether we are giving it right information or not. That is one of the essential quality of the financial report. If you are giving wrong information, there is no use of giving that information in the financial reports. And then comparability. See, as I already mentioned, comparability is one of the essential features. Each one of the stakeholder will try to make a comparison. Even the management also will try to make a comparison of its performance with the other company. The competitors will do, shareholders will do, government will do, and different stakeholders will do this comparison. Therefore, the information that is given in the financial reporting or financial statement, it should be comparable. It should help to make a comparable decision. So we'll talk more about giving lots of information, relevant information, understandable, comparable, all type of things we spoke about financial report. But we have to understand the complexities involved in the financial reporting also. So we have to follow the accounting standards, and we have to collect data from different sources. This creates a complexity. Understanding and interpreting the accounting standards is one of the difficult things, and summarizing the information from different units is also one of the difficult things under corporate financial reporting. And ensuring the quality of the data, that is reliability of the data. So certain times some information will be given on just mere assumptions and hypothetical base. So ensuring data quality in that cases is a little bit difficult. And also that given the complexity of the process, given the enormous nature of the data involved, this report should be submitted on time. They should be prepared within a period of 1 year or within a period of 3 months or 6 months. So this will put a constraint on the timeliness of the information. So this is one of the challenges, that the financial report should be prepared on time. They have to be prepared within the time frame. Otherwise, they will lose the relevance. They may not be useful for the stakeholders for which they are meant for. If you are not given on time basis, the value of the information, because business is a dynamic process, we have to give information in a very time bound manner. And as I already mentioned that we have to comply with accounting standards and other regulatory requirements also. So making a proper balance between the regulatory requirement and accounting requirement is one of the toughest challenges in the preparation of financial report. So these are the 4 challenges. These are only tentative things. There will be more challenges that will be arising in the process of financial report. This is about financial reporting. And then the next topic is about human resources. This is your 15th unit. It is about human resources. Let us try to understand what is meant by human resources. See, we'll always talk about growth and development of a business organization. So, how the growth and development of a business organization is achieved is on the efficiency of the people who are working with the business organization. So, it is the people who will make a business organization to be successful. So, without human resources, without having human resources, nothing can be done in the business operations. Everything will be on stable basis. Nothing can be moved ahead. So it was only the human resources who will try to utilize various resources of the business organization, and they try to make it then effectively utilize. Then they will try to generate the profit and try to improve the financial position. So, what are the various resources that can be managed by the people in a business organization? It is again the human resources has to manage the human resources. They have to manage the material. They have to manage the machines, money, and different methods. So all these things can be done by the human resources. It is the human resources that is nothing but Human resources are nothing but the people who are working with the business organization, who are running the business. They are the people who are doing business. But having this much importance for the human resources, despite of having this much importance for the human resources, the human resources were not the perception is that the human resources are not properly valued by the management of the organization. They were not given the actual importance that they deserve in the functioning of a business organization. So whatever the amount that were incurring in managing the human resources is considered as a exhausted cost. It is considered as an expense. It is not considered as an asset. But the researchers suggested that whatever the amount that were incurring by the companies in the development of human resources will not only contribute for the present requirement. The expenses that are incurring on the development of human resources will also be in the future. That means the human resources will be considered as an asset instead of considering a liability to the organization by considering them as an expense. Proper human resources who are in relation with the requirement of the business organization, we can consider them as an asset. We can consider them as an asset. We can use them in the future operations also. We can use them in the future operations also. So with this, what happens is, according to the accounting principles, we can say that when there is any expense, we will return it off. We are considering any revenue expenditure. For the human resources are considered to be the revenue expenditures, and whatever the cost that was incurring on the human resources is taking out as a revenue expenditure from the profit and loss account. And every time their value is diminishing. But according to the human resource accounting concept, what they states is that the investment in the human resources is a capital expenditure. That means it is not an expired expenditure. Whatever the amount of expenses that you are incurring on the human resources, in the form of salaries, in the form of institutes, in the form of any other benefits that you are giving to the employees. That is not an immediate exhausted cost. That is a cost that can be helpful for a longer period of time if the human resources are properly managed. That means if they are properly retained in the business organization. So that they can be helpful for a long period of time. This is what the concept of human resources accounting states that. So at present, there is a change in this concept. That I mentioned that while we are considering it as a revenue expenditure, now there was a growing demand giving more value to the human resources as a part of organizational growth and development. So the whole human resource accounting concepts will delve into this area. How human resources can be valued, how they can be in the time of preparing the company. This laid out by Rensis Likert in the year 1960. His focus was on HR, and he tried to understand the importance of human resources in the long run. So he was the first person who initiated the process of valuing the human resources from the HR perspective. How he identified such qualitative parameters like their performance, like their achievement of targets. So based on this, he focused on valuing the human resources. So what is a human resource? Is nothing but the cost and the value of the people it is about measurement. What is the cost and how the people are valuable to the organization. So it involves measuring cost incurred by the organization in recruiting. So normally we have to recruit the people, we have to select the people, and then we have to hire them, we have to train them, and we have to develop them, and we have to judge their economic value to the company. See, all this process involves cost. It cannot happen in a free way. So recruiting is a cost process, again selection, again training and developing employees. All this involves cost. And after involving all these costs, after incurring all these costs, we have to judge whether this cost that we are incurring on this particular human resources is valuable to the organization or not. This is the whole thing of human resource accounting. It will help towards improving the performance and employees. Once if you are doing this measurement, once if you are doing this analysis, once if you are trying to understand what are the costs incurred on each individual, so we can define their targets. What is expected from each individual? What kind of things he has to be done? So then accordingly he will be rewarded. He will be given benefits according to his performance, and also his actual value to the organization can be evaluated in a systematic manner. In a systematic manner. Human resources accounting helps in achieving the goals of the organization along with providing growth and development of the employees. So with this information, we can achieve the goals of the organization in the long run. We can achieve that, and at the same time, the employees also can be developed and their growth can also be ensured. So if this system is not followed, we cannot link the organizational growth with the employee performance and growth. So with the help of human resource accounting, what we can do is we can ensure both the growth of the organization and as well as growth of the employees with the organization. It will help us to understand what is the contribution of human resource towards achieving the goals. How each individual is contributing towards achieving the goals of the business organization. Okay? Through the HR, through the human resource accounting, we can understand that the employees are considered as the valuable assets of the organization. That helps to generate the revenue for the organization. So the expenditure that we are incurring on the human resources is not a one-time expenditure. Whenever, though we are incurring it now, it may be higher, but it will have a future benefit. This is what the essence of human resource accounting. Objectives of human resource accounting. It will help in the decision-making process. It will improve the decision-making process. So under human resource accounting, we will maintain different records of the employees, and these records will provide information on the employee performance and the effectiveness of the policies that we are taking. So the objective of human resource accounting is to improve the position with respect to the performance of the employees. Expected to improve the performance of the employees. The performance of the employees is evaluated. This automatically will help in the contribution of organizational performance. It will also improve the organizational performance also. So therefore, one of the important objectives of human resource accounting should be to improve the decision-making process. So the other thing is to improve the performance of employees. So based on the information that we are generating through the HRA process, human resource accounting process, we can judge the effectiveness of the employees. We can identify the weak areas of the we can understand what are the policies and programs that need to develop the performance of the employees. So performance employees, improvement of the performance of the employees. Better resource allocation. See, the organization will have different types of human resources. So with the growth and development of the business organization, there will be different segments where there will be shortage of human resources. So without knowing the actual set of human resources that they are processing, we may sometimes go for recruiting additional people from outside. So which will automatically increases the cost of the company. So through this better accounting, human resource accounting process, what we can do is that we can better utilize this human resources by understanding where there was a shortage and where there was additional human resources are available. So we can identify the additional resources available with the business organization. We will try to make a balance between the resource constraint with respect to the human resources in the business organization. So the human resource accounting should achieve the basic objectives of improving the decision making, in improving the performance in terms of policies that need to be framed, and as well as improving the performance of the employees, and as well as better apportionment of resources across different business units of the business organization. The human resource accounting should enable to value the human resources. How an each individual will be valuable to the business organization. Some person skills and knowledge may not be relevant to the business organization. So with the parameters and with the processes that they are following under human resource accounting, we should enable proper valuation of the human resources. And also the human resources accounting should facilitate a better incentive mechanism. As I already mentioned, that after valuing the human resources, we will understand whether one particular human resources is valuable to a business organization or not. So based on this information, we can decide what kind of incentives can be provided to each individual in a business organization. So one of the objectives of human resource accounting is to provide better incentives to the employees by the information that was generated through the process of human resource accounting. And the whole here is one difference we have to understand is that it should facilitate the human resource management. So human resource accounting is different from human resource management. So human resource management is concerned about how to recruit the people, how to train the people, and how to place the people in different departments, and how to guide them to do the work. On the other hand, what HRA will focus is on that. What kind of expenses that are incurring on the human resource management? What kind of value that human resource management is doing? So that thing can be done in the human resource accounting. Therefore, the process of human resource accounting should facilitate the process of HRA management. HRM is about only managing the human resources. Though it will focus on the costs and they will try to make a balance between the cost incurring of the cost, the HRA will try to capture that cost. It try to understand what is the value created by the operations in the human resource management. So the whole objective of human resource accounting is to value the human resources. What is the actual value of the human resources? See, before we try to understand about different methods of valuation, we have to understand that the process of human resource accounting is in the emerging stage. It is in the emerging stage, and not all the companies or not all the people across the country are interested in this HRA process. But some organizations are giving preference to this HRA, human resource accounting, and accordingly, they were following different types of methods according to their convenience, according to their assumptions, according to their knowledge. But so far, what happening is they are not giving this information in the financial statements directly. They are not showing any human resource expenditures or any value creation on the human resources as a part of the balance sheet or profit and loss. They are not reflecting that, but they are giving it as a additional information in the financial statements or in the financial reports. So with financial report, this is apart from the financial information that is given in the annual report, financial statement. So in this way, each one will follow different type of method. We'll try to understand some methods that are available to us. So one is capitalization of salary method. So under salary method, what they will try to do is they will try to take one set of employees. They will try to take one set of employees. Say, for example, in an IT industry, there are a group of software employees. So under capitalization of salary method, what they will do is they will try to make a earning profile of that group of people, and they will get what kind of amount they are generating. And over a period of time, they will try to analyze the earnings of each person as a group, each person. So, say depending upon their age, for example, if a person is at the age of 35 years and he will be going to stay with the company for a period of some 60 years. So, for a period of the 25 years, based upon the salary that they were generating and taking their age factor, they will try to calculate the value of that employee in the present context. For this, they will calculate the present value of their current earnings. So this formula that was given here. So the numerator gives you the value of the numerator gives you the earnings of the employees until the retirement age. The numerator gives you the discount rate calculated for a period of how much time they are going to stay with the company, and the age in terms of age. This will give you a specific for the employee with the organization. Based upon the future earnings, his current value can be calculated. Using this information, the value of human resources can be compared with respect to other assets and liabilities. We can calculate different other comparisons also we can make other than human resources. We can make comparison between human resources and fixed assets. We can make a comparison between the value of human resources and the revenue. So based on the information generated through the based on the valuation of employees and the salary method, we can make some comparison between other financial items. Economic value added. Economic value added is that it doesn't take earnings capacity or not, but it will what is that? To try to make that what kind of additional value employee provided by doing different type of activities, not one particular activity. In the salary capitalization method, what we studied is we studied on doing one kind of activity. But under economic value method, what will happen is we will try to do a human resource in terms of different types of duties that is going to be performed with respect to the company over a period of time. Like that, today he may be doing today he may be doing a software developing. Tomorrow he may be going for he may be doing a training program for the people in the organization. Also, other day he may be focusing. Next time he may be focusing on the sales department. So likewise, an assessment can be made with respect to what an individual can contribute to the company over a period of long time if he stays with the company. That means what kind of value addition he can make by doing different types of service and activity. So this is an hypothetical thing. So determining the value based upon hypothetical assumption is very difficult. So this is completely an hypothetical. There will not be any numerical data. It is a qualitative analysis. Return on the efforts employed. Here the value of that employee is measured based on what he is contributing to the organization. It is the current state of what he is doing. It takes into account the factors that will distinguish between quality and quantity of efforts. So it is about what he is currently doing. So what kind of activities he is doing. In terms of quantity means which can be numerically measured. Say for example, numerically measured means there was an indicator that how many people he is training. If a person is training this number of people, so it can be measured in the quantitative. There will be certain things he will be giving suggestions and he will be giving some motivational things which will indirectly motivate the other employees in the organization to do the work. So this is a quality perspective. So like this, the value of that employee can be determined depending upon the level or grade of the work he has done and the effectiveness of his job based upon the effectiveness of that person in his job position. And he's taking his experience into consideration. So accordingly, what are the efforts that a person has put in the development of the organization will be taken and a value can be assigned to that. And then we can calculate the return that was generated by that particular person in terms of performance, in terms of his actual performance at a particular point of time. It doesn't have any future. Behavioral variable method. So it takes into account different behavioral traits of human resources in business and how they are achieving the organization goals and objectives. Behavioral aspect is the most important measure that is taken for the assessment of the performance of the employees. So it will help you to understand what an actual individual is, how he will work, which is important for the performance assessment. So we can understand what is the actual attitude of a person, whether he is performing well or not, whether he is interested to work with the business organization, what are his motivational levels. All this can be understood. So this method will help to monitor various parameters like such as we can understand the employee satisfaction, we can understand employee turnover rate, we can understand the span of control, how much time he will be staying with the organization. So it will automatically link the performance with the achievement of goals, conflict of interest, control, and rewards. The behavior of the employees can be assessed either in group or in individual. So behavioral aspects can be measured from different dimensions. So we can be measured with respect to his attitude, his motivation levels, his leadership qualities. So how various segments of an individual is helpful to create value for the company. Under behavioral method, we will try to link the behavioral aspect of an employee with the overall organization performance. So these are some basic models. See, what we have to understand is that here nothing is reliable. All the things are based on assumptions and hypothetically defined values only. So that is why the human resource accounting is not gaining the importance that it has to be derived. So these are some of the important models. In addition to these models, we also have some other models also. So for your information, I am giving of some of the human resource valuation model. Some are these are broadly classified into two categories. Some are cost-based models, some are valuation-based models. So cost-based models can be called as a historical cost model. Just for information, I am replacement cost method, opportunity cost method, standard cost method is there. Valuation model. See, valuation models are the very important models. See, whatever we have discussed so far also are all developed by different persons. See, you can see how many people developed a different model. Levin Shepard's present value model of present value of future model, Flamhold's and stochastic reverse valuation model, Morse net benefit model, Jaggi and Love human resources model, Organ's discounted certainly equivalent benefit model, Dave modified present value. See, this is the problem with human resource account. You may think one, I may think one. So here different people are there. They were thinking, they were having their own assumptions, they are having their own idea of measuring the value of human resources. And accordingly, they developed different models. So as for each model, you'll be getting different value for the human resources. So benefits, it involves everything from hiring and firing to training and development of the human resources. We can give better employee benefits. It can be controlled in terms of compensation and in terms of bonuses, in terms of stock options, and other payments can also be included based upon their performance. So we can take a note about the working hours and whether they are performing well or whether they are staying with the company for a long time or whether they are living in between. And it helps in maintenance of proper record with respect to the maintenance of human resources. So helps in administratively the information about the human resources from different perspective will be helpful in the in ensuring the efficiency of the business administration, and the recruitment of selection process will be streamlined. So proper human resources will be selected instead of selecting those instead of selecting some uh, uh, unresourceful person. They can select proper human resources that are useful for the company. These are some of the merits of the human resource accounting. Limitations. As I already mentioned, there are no specific guidelines and the procedure for measuring the cost and value of human resources. Each one is following different parameters. So sometimes it may give misleading information while the valuation of human resources, because the demand for human resources maybe keep on varying. So whatever the valuation we have did based on the assumptions may not be appropriate. So the legal and tax structures may sometimes affect the process of valuation of human resources. So there is no uniformity in the methods and procedures following by different companies, and and there won't be any consistency in the human mindset. There won't be any human consistency in the human behavior. So no, though we have made assumptions and we measured the value of human resources in the current context, in terms of their consistency, productivity, in terms of their consistency in terms of productivity and efficiency may not be there for a long time. There may be variations, there may be changes in the behavioral aspect of the human resource. So that is one of the limitations in the human resource account. Though we measured, it may not give proper information for the proper motivation of and engagement of the human resources. So as I mentioned that they are based on certain assumptions which are not valid and which are and sometimes there may be ambiguity in the application of certain assumptions. So, unlike financial accounting, HRA is not universally acceptable, and it is still needs to go a long way compared to financial accounting. But now it is being making a part of some of the in preparation of some of the financial statements. Same thing with respect to India also, though there was a growing demand for the human resource accounting, it was not so encouraging with respect to in the context of India. Indian Companies Act or neither the Chartered Accountant, Indian Institute of Chartered Accountants are not given any specific guidelines or any specific regulatory requirement to give the information. Business organizations are giving some information, though they are not giving complete information, they are trying to give some information on the human resources. So some surveys conducted indicated that not all the companies are disclosing the relevant information on financial reporting. Only a few companies are displaying the information. However, going towards HRA can be helpful for adding more value addition for the financial reporting process. In the coming days, it is expected that the fair value accounting may gain more importance in the context of India too. So these are some of the companies in India reporting on human resources: BHEL, SAIL, ONGC, Oil India Limited, Project Equipment Corporation of India, Engineers India Limited, Electrical India Limited, and Shipyard Hindustan Limited. See, here some mistake came. It's not cost-based model or value-based model. They are the list of the companies. Just simply they are list of the companies. They are not following any specific model. Some problem with that. This is about human resource. Any doubts? Any doubts? Hello, any doubts? If somebody asked for PPTs, can I share that PPTs here? Okay, thank you, thank you. Yeah, I'm sharing the PPTs. Someone
Okay,
wants,
sir.
you can take. Okay.
Ah.
I'm adding all the PPTs from first day to sixth day. I'm adding all the.
Okay, sir.
Okay. So for those who are wanted to solve the problems also, I gave information. You can go through that.
సార్ ఇప్పుడు ఒకవేళ ఏమైనా డౌట్ ఉంటే ఇప్పుడు ఎట్లా రీచ్ అవ్వాలి, మిమ్మల్ని ఎలా కాంటాక్ట్ అవ్వాలి?
Doubt and regarding problems అండి.
అవునండి.
తీసుకోండి, నేను నెంబర్ ఇస్తాను, మీరు కావాలంటే యూ కెన్ స్టార్ట్.
సార్ చెప్పండి సార్.
నో, ఇక్కడ చాట్ బాక్స్ లో పెడుతున్నాను చూడండి.
ఓకే.
నేను ఆల్రెడీ అడిగారు మీ వాళ్ళే, నేను పంపాను చూడండి, నెంబర్ పెట్టాను. ఓకే.
ఓకే సార్.
అన్ని సెషన్ పీపీటీస్ కూడా యాడ్ చేసేసాను, సరేనా?
ఓకే సార్.
చూడండి అన్ని అప్లోడ్ చెక్. ఆల్ 6 days PPTs అప్డేట్ అయ్యింది, చెక్. ఓకే
ఓకే సార్.
రైట్, అన్ని 6 అప్డేట్ అయ్యాయి చూసుకో. ఓకే, థ్యాంక్ యూ.
ఓకే సార్, థ్యాంక్ యూ.